Is a wire not a wire? Most of you are familiar with the types of funds that a settlement agent will take to open or complete an escrow transaction. Each settlement agent may have their own management policies, but they tend to be pretty standard. But what do I mean when I say, when is a wire not a wire? This is Juliana too, and let's talk about the possible ways to transmit funds to an escrow. Each company has their own management policies regarding this, but here, in general, are the standards of the escrow industry. Keep in mind that in a transaction, we cannot close escrow until the funds sent to us are fully credited to our account and are available for immediate use. The ways to transmit funds. There's cash, which we won't take at all. Cash is not king in an escrow transaction. There's personal checks, which we will take early on in the transaction, but we have to give it at least 2 weeks to clear the check. There's cashier's checks, which we will take, but it requires 5 business days to clear the funds. And then there's official checks, also known as a bank check, which we will take, but it also requires 5 business days to clear the funds. Then there is wire funds, and this is the preferred method of funds transmittal and considered available for use upon receipt. So, to answer the question, when is a wire not a wire? It is when it is ACH funds. Now, ACH funds, we will not take this at all, and this is our discussion for today. Let me start out with a definition of ACH funds. ACH is Automated Clearinghouse. It's an electronic funds transfer between banks through this automated clearinghouse network. Why is this different from a wire? It's still an electronic funds transfer from bank to bank, right? Why do we not take ACH? Here is some background information. A request for an ACH transfer is not processed immediately. Banks, financial institutions process their requests in batches, about 3 times a day. Some financial institutions require 2 to 3 days to process a transfer. The transaction itself takes 3 to 5 business days to clear. So the receiving bank financial institution can put a hold on those funds for that amount of time and not allow you to use it. During the time that is set aside for clearance, the sender can revoke the transfer at any time. So the receiver may not be assured of the availability of the funds until at least the 5 business days have passed. Can you imagine if I needed the funds to close your escrow the next day? Well, it wouldn't be happening under an ACH transfer. ACH transfers are not on the list of forms considered good funds under the Good Funds Law, also known as the Residential Closing Funds Distribution Act of 2005. And because of all the above, our escrow government regulators and our banks, which handle the escrow trust accounts, will not allow us to take an ACH at all, even when we have time before the funds are needed to be used at closing. Our clients, however, may not know all the differences between an ACH and a wire, particularly when they do the funds transfer online directly from their computer and not going into the bank itself. Even though we give them the wire information, they might end up picking the cheaper method, the one with less information needed to be typed in, and then they end up doing the ACH. Here is a story from the trenches. The borrower needed to wire us a little over $3,000 to pay for closing costs of his refinance transaction. The amount needed and the wire information was sent to him when he was signing his loan documents. 3 days later, his funds still did not arrive. We called him, and he showed us proof that the funds were transferred the way he had asked it to be. Days of communicating back and forth, and it still did not arrive. Over a week later, our bank got the funds, but it came in ACH form. And our bank immediately put us on notification that they were rejecting this ACH transfer. After contacting the borrower, we found out that when he clicked the type of transaction requested on his computer, since it was not a large amount of money, he chose the cheaper option, thinking he could save money. And so it went as an ACH. Once the funds were rejected by my bank, it took 72 hours for Mr. Borrower to get those funds back into his account so that he could properly wire it back to us. This whole process, communicating back and forth, transferring funds back and forth, took 10 days when it could have been taken care of in just a couple of hours. 10 days is an eternity when his loan rate was expiring. To save money, my borrower paid $10 for the original ACH. Then he ended up paying another $30 to wire the funds again. And he had to pay an extra loan origination fee to extend his interest lock that expired within the 10 days. All this time, effort, communication, stress, and frustration just to send us $3,000. What a mess. Here is the lesson to be learned. Sending funds to escrow is important, yes. Sending funds to escrow securely is also very important. Sending funds to escrow in the required format by wire is very, very important. Be sure that's exactly the function that you choose, especially when you are sending only a small amount of money. So when is a wire not a wire? When it is an ACH. This is Juliana too. Thank you for listening. The video subject matter may not be as grave as the other ones in this series, but it is still one of the dilemmas that we face from the escrow trenches daily. By the way, with wire fraud being another huge topic of discussion, be sure you watch my Threats to Escrow series, my wire fraud video in there. It cautions you what to watch for when sending wires to escrow or anywhere else. The link is in my description below. Subscribe to my channel, like my videos, give me feedback or comments. My information is in the slide below in case you need me. Thank you, and I shall see you in my next video.